Right, welcome everyone to this video, and in this very section of this course, I'll be taking you guys on the topic breaking down trends and consolidation. Breaking down trends and consolidation. Before I start going deep into the topic, I'd like to demonstrate what trend and consolidation looks like or simply means. That is for the sake of new traders in our midst. So the trend in the financial market, as you know, is simply the direction that the price is going toward. So in this case, this is an uptrend, right? Then on this other hand, this is a downtrend at the moment, right? So it's simply the direction that the price is heading toward within specific period of time or within a time frame, depending on the time frame that you are using. So that is what trend is all about. And on the other hand, consolidation is simply a phase, right? It's a phase and it usually occurs after price might have moved a strong move, or after price might have gone through or went through a strong trend. It's a period of indecision because at that point, neither buyers or sellers don't usually take charge of the market. It's just a situation you see. This is the boundary, you can call it resistance, and this is the support, right? And the range or consolidation occur in this way. Inside this range bound until there is a breakout. So that is what consolidation is all about, and then the trade basically. Or as well, trend line is a full-blown course on its own, right? Trend line is basically the foundation of price action. So it is a full course on its own, and you can track back to my course catalog. I have two trend line courses. So if you're not familiar with the trend line, how these things work, it will be of good if you can go back to learn those basic foundations and the core demonstration or uh, topics under it to make sure you understand trend line properly so that it will guide you through what I'm doing here right now. So market move in cycles, right? Trends and consolidation. A trend is a directional move while consolidation represents rest or indecision, just as I just finished illustrating. Let me increase this a bit. But I have the material attached to the topic. Every topic have its own lecture material attached, so you can download this material from the resources section for free. An uptrend shows higher high and higher lows. Just as illustrated, it's good to use a real-time chart to do this. Higher high, higher lows, higher high, higher lows, higher high, higher lows. That is how price goes until you see a breakout. So this is simply an uptrend, right? This is uptrend. We are doing illustration, so the trend might not be perfect. So on the upside, we have the higher high. So this is higher high, this is higher high, this is higher high, this is higher high, this is higher high. On the lower part of the uptrend, we have the higher lows. This point that the price connects with the trend line. So trend display a clear flow, momentum candles, and respect for swing points. Consolidation occurs when price moves sideways within boundaries, showing indecision and balance between buyers and sellers. So when I demonstrated that consolidation, said something that it is a moment of indecision, right? So it is a balance, right? We all know that the price movement in financial market is a two-way struggle or a debate between buyers and sellers. That's why you see this movement the way it goes. It is a tussle. That's why you cannot have price candlestick moving straight like this for a long time. Even this kind of movement you see right here, this is institution, but you cannot go longer or continue this way because there is opposite a power trying to take over the market or also place a block order that can influence the market. So the range bound is just like a balance. Neither buyer or sellers are in charge. So buyers stood here, push the market up. Sellers stood here, push the market downward like that continuously until the consolidation end, right? Or you see a breakout. So the market alternate between these two phases. This is basically one of the major phases in the market. After strong trend, consolidation often appears. So just like I said, after a strong trend, consolidation usually appears. Situation that the price has moved, let's say over a specific period of time, depend on the type of trader that you are. Then the next thing, price usually enter a consolidation phase, right? This is not a really proper movement. Do this very movement look like a correction? Let me still go back history if I can find a proper consolidation zone. Let me move to 30 minutes. Please, this is how I run my own course. I don't really prepare some of these things to sketch it and keep. I try as much as I can to make sure as we pick a point, we move to the chart to see the thing live. It's not a prepared lecture or illustration. So this is typical. This look like a consolidation, right? First impulse wave, pull back, second impulse wave, then price start getting weak at this point. You cannot really say if buyers or seller are in charge of this movement. Then the next illustration of consolidation is this. It's a consolidation. This usually occur after a sharp price movement. It consolidates. So what you have to do is to wait for a breakout. We are getting the gradually. So that is basically what that statement simply illustrate. So let's move. So the breakout after consolidation, breakout often flow. False breakout are common. So traders should wait for candle closure and a retest. So breakout is very common. Breakout is when before now in the previous topics, I think I said something about how institutions exploit retail traders. So this false breakout is one of the ways these guys retail meaning institution usually trap retailers, right? So whenever you see a consolidation, we move to 1 hour. If I can't find a great consolidation in this chart, I'm going to switch and need a proper consolidation to illustrate what I want. Okay, I think we can agree this is a consolidation, right? Yes, it's a consolidation phase, obviously. So the up is the resistance, the down is the support. So false breakout is this. This is a false breakout. The moment that it treat like the price is breaking out of the range, all of a sudden price return back to still continue within the trend line. And this is where the real breakout actually took place at the end of the day. So you have to pay attention to this thing. Always wait for a confirmation, right? Before you can jump into the trade. In this case, this actually looked like a genuine breakout, right? Why do I say so? If not one thing, I personally can be trapped into this move to think that this is a real breakout. Why? Look at the number of candles that lead to this false breakout. One, two, three, four strong sell candle, and the last one closed outside the consolidation zone. What is the thing that will stop me from entering this trade is that when price breakouts of a zone like this, to me, this is what I look out for before I take my entry, right? A retest. So after the price retest at this point, you can see a sell confirmation in the retest zone, which is this bearish candle. So this is the only thing that can give me a signal for me to enter this trade. And you can see after the sell confirmation, this sell candle is strong to a certain level, right? It's strong to be used as a confirmation. After that, look at the moves that took place, and right till this moment, the price, this currency is still on a down trend, right? So this is false breakout. Why I'm not going to trade this is that outside the candle that formed strong inside the zone, we have similar situation here. So it is assumed consolidation price supposed to move, right? Range bound. This is false breakout on the resistance side. This price is designed to move inside this. So I need to see like 2 to 3 candles outside before I can take this to be a genuine or real breakout, not a candle inside the range zone. 2 to 3 candles, because when the price breakout, you're supposed to look for a nearby support zone. Just in this case, you can see this is our support. As this breakout took place, what it's looking for is a nearby support zone to hit and bounce. Once it hit the support, it's going to return back to fill the imbalance created, which can be also classified as a retest or a pullback. After filling that imbalance, you still have to wait at this point for confirmation, which I said this sell candle is enough to show us that this is a sell confirmation, and at the same time you can combine it with other candlestick sell candlestick patterns that we have in the market. I did a brief mention of a few of the sell and buy candle we have in the previous topic, but like I said, I have a full complete course on candlestick pattern formation you can trace back as well. So that is exactly what you are going to look for at this point, one of those candlestick pattern to give you a confirmation to go into this trade. So this is what false breakout or fake out look like. Situation they will treat retail traders like this is a breakout. All of a sudden, price return to still continue in the range zone. Okay, where was I? All right, traders should wait for candle closure and retest. I explained that in trade in the direction of momentum. In consolidation, focus near range boundaries or wait for a breakout. Right? In trade in the direction of the momentum. What does that simply mean? Is trade in the direction of the momentum. If you want to use a trend line to identify your entry, you have to move to more higher time frame to look at the direction that the price has been going over sometimes now. And with this pay and agree from here, this is Tuesday 16 September 2025 down to date dated October 2025. This currency pair has been on a downtrend. So whatever you're looking for in this currency pair, you should try to align with this prevailing trend. Why is it so? I know in the midst of this, some people can still trade, buy and make profit. Of course, this is a buy movement, 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 right? But the direction of this buy is not certain. Like the target, you can see some buy stop somewhere and return back without hitting the trend line. The same thing applicable here. That is because that is not a prevailing trend. The prevailing trend is sell. So whatever you're looking for, you should always target a sell trade in a scenario like this. So work with the prevailing trend, right? So that you'll not be caught with uncertainties on the way. Maybe you set a target and price could not reach the target before it return back, right? Because if price leave you in this place, is going down, you may not, it may come down, meet your stop loss and keep you out. But if you target a sell, look at the candle have been selling over specific period of time. And so even you trade with open TP, your account is still on profit because the overall trend is downward, right? So in consolidation, focus on near the range boundaries or wait for breakout. So I have to also state that there are some traders, mostly traders that trade lower time frame. Where was the zone amid that consolidation? That time I'm looking for the consolidation. Okay, here it is. You know, when you compress, you need to compress this chart for you to see it fully or see the overall trend of the market. Because if you expand the chart, the candles become tiny. I mean, the candle become big when you expand it. So I want to let us know that some traders that are sweat trade this. I don't know why my lines are not showing. Probably network. But let's move. So what does statement reach say? You should trade consolidation on the support or a resistance zone. So I was about stating that there are some traders that will stood here and trade within this consolidating zone. Of course, this is a buy movement, this is sell, and this is 1 hour time frame. So this movement here is a very serious movement. Intraday and scalpers can secure a very nice profit in this place and leave the market for the day, right? This is buy, this is sell, this is buy, this is sell, this is buy, this is sell. So without waiting for the breakout and retest, some traders usually trade. So if you want to trade within this region now, then you have to make sure that your entry, example, a sell entry should place when the price comes to the resistance zone. Then your buy entry should be within the core support zone, which is the other side of the consolidation just as I illustrated. Or if you cannot trade that, personally, I don't trade this. It's said you can only see me in this situation executing trade if this consolidation meets me mid market. That means already open position before the consolidation start. I can stay, but if using this for a fresh setup, I can't trade this range bound. Instead, I'll wait for a breakout and retest, just like I said, before I execute my trade. So avoid trading mid-range, that is, avoid trading in between those consolidating zones, between the support and the resistance. Avoid trading, placing taking position in between. It's not a good position. It's going to expose you to a lot of risks, right? Also, don't assume every breakout signal trend change. Yes, just like that false breakout that I just illustrated. So trend express market direction, consolidation express a pause, which I stated neither buyer or sellers are in charge at the moment. It is indecision or a balanced moment. So recognizing the phase is going to help traders align with institutional flow and time a trades with precision. So that is the advantage. Once you recognize what I just listed and you align with it, you are going to see how your trade is going to take a serious step forward. Because why you should avoid trading in a zone, right? Though scalpers can still do it, like I said, but why you should avoid trading when the pricing concentrating is that institutions are not present in the market at that moment. So in that case, what are you going to expect? You are going to see a lot of wicks, shadows, that is price rejection are going to be much because what is happening, it is likely only retail traders like you and I that is moving the market at this zone. Meanwhile, institutions are collecting their orders. What do I mean by collecting their orders? They place a pending orders waiting to execute, right? So that is why you should always wait to have a clear confirmation, because once you see a confirmation or a breakout, let's say a breakout, that means institutions have stepped into the market. They are going to see who is in charge or have higher momentum in the market, whether buyers or sellers, depend on the direction that you are trading toward. So that takes us to the end of this topic. We are going to illustrate all these things in a real-time analysis when we are drawing a case study and practical illustration, right? So see you guys in the next video. Thank you.